Good morning, traders. Welcome to the TraderLab. I'm your host, Tom B. Thanks for visiting. Thanks, Marty. Thank you, Dan. And good morning to our visitors in YouTube today. Thanks for visiting the TraderLab. This stream's about incorporating bookmap order flow tools with auction market theory using a volume profile as a chassis in the intraday developing time frame. It's based on structured trades. They're available to all of you at no cost in the Bookmap Discord TraderLab. TraderLab is a community of like-minded traders who've come together to leverage their collective experience. This is about the business of trading. There's quite a gap between the fantasy and the reality of this business. And no matter how long you've been doing this, and our senior trader has over 50 years experience that he admits to, and I've been doing this for 46 years, both professionally and out here with you. The reality of the business is it is not a conglomeration of indicators and time frames. There's much more to it, yet it doesn't have to be complicated. It is random, so that is one element that we are really allergic to, and we try to solve for randomness by creating certainty. And I always like to mention this, especially for developing traders, is there is no certainty. So if we can't get certainty, we have to really solve for uncertainty. That might seem very logical, but the actual business is uncertain. So if the uncertainty is about the individual rotations or whatever might happen at any specific time in the market, which is uncertain, then we have to focus on the uncertainty and learn to live with uncertainty. Even though we're not aligned psychologically with uncertainty, we're actually wired to seek certainty and to avoid uncertainty. But when you take risk in order to get reward, aren't you actually seeking uncertainty with probabilities of an outcome? It's a different thought process. So the idea is not to try to make this into something that you're comfortable with, because you will not have comfort in a random, uncertain environment, but to understand the environment and solve for that uncertainty. You will not ever be certain, and you will not be comfortable. What you can be is more business oriented and understand your business, the business you're attempting to be in. So that's what the purpose of TraderLab is. There are structured trades that are available to you to research and reverse engineer. The thing about trading, I think that most of us lose sight of, is whatever you do, it must have an edge to it, which means even though you will pay the other side and the other participants, same as the casinos do, that if you actually execute a statistical edge over time, and it's proven mathematically, if you do the work, you will extract the dollars from the other participants. Period. That's it. So if you're looking beyond that, fine, but you might be creating a lot of variable inputs that are not measurable. If you're in a random environment with random inputs, you're gambling, in my opinion. If you have anchored inputs, and for me that means minimum inputs, not more inputs to create certainty, minimum inputs not to obscure edge. Is that something that might make sense? And of course, again, it's counterintuitive, and I stress the word intuitive, because intuition and primal wiring directs us to make choices that might be in our interest back on the savannah, back in the day, but not in the business that we are attempting to create sustainability in. So much for that. But that is really where we are. That's a TraderLab. And if that resonates with you, and even if it doesn't, come to TraderLab. Use the link in the bottom of YouTube if you're visiting, and there's no cost for it. But it might give you a perspective that's different than what you have today, especially if you're not sustainable as far as what you're doing. Random winners, we all have them. But if there's no edge, you still go out of business. That seems to work pretty well for the casinos, even though they pay the gamblers. So the gamblers do have winning hands. We have winning trades. But if there's no edge, we still lose. Is that you? It's been all of us. So it might be you. And if it is you, I invite you to come to TraderLab. Maybe it'll help you see this business a little differently through a different lens. General disclosure, all Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure, trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Please remember this is not a trade calling room. The idea of this stream is to help you understand market mechanics. How does the market work? Why does it do what it does? And how, at times, with structured trades, you might get in alignment with it. And like everything, there is no holy grail. There's no secret sauce. There's no silver bullet. It just doesn't exist. All that exists in this business is something called edge and a random distribution of outcomes, and the psychological and emotional triggers that make us all crazy. So there. Now, let's take a look at the condition of the market. Now, what I like to do is I'm going to go over yesterday, which sets up in other words, day before yesterday. Now, we had our trend day up, and that was on the Jackson Hole. Oh, we might lower interest rates. Okay, fine. So the market, let's look at just the condition. The market goes up, which means there's sell stops under here. And then if we run out of buyers, and this is the all-time high, what happens? Sell stops, we'll see you later. And where does it go? Well, it comes down here and we clean all the longs out. Well, once we clean the longs out, what do we have? Shorts. What happens to the shorts? Sorry, Charlie. And then up we go on news. Okay. And we squeeze out the shorts. Now, what happens to the longs? There's an old saying, and it's not that old, very logical. Market goes up to go down, market goes down to go up. Now, what's interesting about this, it does it in all time frames. So when you're looking at rotations interday, it's the same process. Wherever the stops are on the outside edges, the rotations, that's where the market tends to go at some point. Now, let's look at this from another viewpoint. And again, this is day before yesterday. I marked this up yesterday and I said, well, this looks like a short squeeze. And it doesn't matter what I say, by the way. I mean, what I mean by that is my guess, and all it is a, quote, educated guess, is that the market might do something, and where are the locations and the behaviors. And it's nothing more than that. It's based on experience and understanding market mechanics. The other part of it is I have no clue, and I don't believe anybody else knows what the market will do, but we can determine based on the behavior what it might do. So let's look at this. All-time high. This is the Acapulco cliff dive. 54 was our over-under for falling out. Those of you who followed the stream, the 54 has been a big deal. You'll notice on the up day, we got over the 54, and this is a poorly auctioned area. Now, there's a couple levels here we want to be aware of. 54, which is if we get above here, fine. If we fall under here, then we have the potential to come down to 32 and 28, and, maybe even down here. That's neither here nor there. Let's go a little further. Now, this is yesterday. So now we had 84 as a target yesterday on the upside, which in the morning, and we missed it by a hair, c'est la guerre, life in the fast lane, but that's okay, which says, let's look at the language, too high. Then what? Where was our 54? Here. What's the low? 53.75 or the 54. Okay, let's look at the language now. If this is too low, we can come back to the 63, 64 area, maybe to 72 and whatever. The 54 is like an over-under-ish, okay? But now let's come back a little further. What else do we know? 32 and 28, okay? Let's just follow the yellow brick road. So this is now moot. So let's come back now to after yesterday. I'm back in the higher time frame. Too high. I'm not paying that. Okay. 71, highest volume in this area, multiple time frames. If you want to learn more about this, come to TraderLab. Remember the 54 level? Well, now it's 53. Not that material. Me, horseshoes and hand grenades. Support. If I get below here, then I can come lower. If I get back above it, higher. You're going brilliant. Okay. What's this? Great question. What is it? This is the ETH. Where'd we go in the ETH? The low is right here, around 30-ish. And where's my outside edge? 29-ish. Horseshoes and hand grenades. 29-ish, you see? 32-ish. And it could do anything, okay? So let's not get too carried away. But that's the structure. So then what does that do for me? Great question. So my plan for today was, well, 54 is a big deal. And I know the higher time frame trend is up. So yesterday, if the market goes up, what might it do? Well, what about this? If you remember yesterday's stream and the day before, I believe, this is poorly auctioned. So this needs to be checked because the market, this is what an auction looks like, rotations. When you get the bullet train, the market didn't have a chance to check the prices. So the nature of the auction, and this is auction, is to come back and check. What about this? What do we think? Is that really too low? We were in such a hurry, we didn't stop to check. So it comes back. Now, the joy of this is back to where? You thought you could get that answer here? No. What you can get is where it might go. That's called maybe. Maybe it'll do this. Maybe it'll do that. Maybe it won't do any of it, right? So that's what you get, maybe. So for me, this area, the 54, is really kind of the over-under, and it's an area. Also, I have yesterday's low. So I'm opening out of balance. In other words, away from yesterday's range. It's a gap. I have yesterday's low, and I have settlements up here, which we can certainly get to. And I have this ETH high and something called a single, and which is just from yesterday's breakout to get down to our target of 54. So we can come back here. So this is my target for my longs, and that was my target for my longs, but I didn't start out long. And today's been a non-event for me. Actually, it has been an event. It's an event of my broker's going to send me a coupon to the buffet, and because he's doing all right. Me, been a lot of work, haven't got anything to show for it. I'll show you. So, and that's okay. Day's not over, and I'm still oriented towards one specific direction, but that doesn't mean anything. I trade differently than you do, and I trade higher time frames. So I try to position, and then I pay the price for positioning because I either get paid with a larger rotation, and you guys know I always talk about individual trade plans, but I also have to pay emotionally for that plan because I can have MFE, open trade equity, and give it all back. And psychologically, that does impact me. Not to the point of wanting to take a step on a rake a few times, but mentally, it does wear and tear. And but that's where you have to look at metrics and put aside how you feel on a very individualized one trade, a unique event. And if that happens like through a day, and like today, it's happening to me, where you take, let's say, 3, 4, 5 trades, and the end result is just nada. When the dust settles, then you always then are going to go, maybe I can do this better. And you're going to have that thought unless you have metrics that prove your process. So when we open under the 54, my plan was to look at statistics and opening like this, lower outside of yesterday's range. Here's a couple stats. You got to vet these. There's a 72% probability of checking the ETH low. Now, I have a bit of a challenge with that only because the higher time frame is up. And what does the market do? The market goes up to go down, and we have a poorly auctioned area below me. So I've got conflict myself. I'm going, well, maybe we'll go down first and then go up, get some more shorts in here. Or we're going to get buyers going, bargain city, and then we just go up and we get over the 54. So I come in with a couple ways to play it. So I started out on the short side. So I took a trade. So this is what we have here. RT. Now, this trade is not a trade I suggest for anybody because this is a very challenging place to trade because it's very, it's like 30 seconds in, 40 seconds in. So it's not a good trade for developing traders. I trade it because I'm okay with that. Just something, right here, market comes up. This right here is called the variable high volume node. Made it up. And all I'm doing is I'm tracking the volume. And again, this is extremely aggressive. And I call this a variable high volume node. I also have to give you another statistic here that we need to be aware of. The overnight volume point of control has an 80% probability. So I come up, I check this. This is the last auction, the ETH. So what do I know? Well, I know I can come up here. So that is a bit of an issue, okay, and fill the gap, not a big deal. But if this is too high, I see my liquidity. And again, guys, this is the last trade anybody ought to take. If I had to say, here's one not to think about, this is the one. So what I do here is I have support here, and I have resistance here, and I check this. So right here, I take a short, and I've got to come out under here. And it's a very aggressive trade. I know it's an aggressive trade, and I know I'm, blowing in the wind. So I took this trade, I took a stop, okay? First trade, stop. Anybody ever tell you to take a stop? I take them. Because, and there's something else. Let me give you another reason for this. The ETH mid has a 68% probability. I was looking for this swing to get taken out, to get here. So I was going like from here to here for my scale, and then possibly, and when I say possibly, I don't know, because of the probabilities to come into this area. Yeah, that was just short. Sailing error. Anyway, I took a stop, full stop, no scale, not a Zippo, and get very excited about that. So now I'm up here. I filled the gap, and this is by over under. So I'm still stalking shorts, and it's important that if I come up in here, what happens when I test this range and the 54? So I'm looking for shorts. Let's look. This is a sweep. I got my liquidity here, and I'm looking in this area to revert. So I'm still looking for a short. And of course I'm going, 54. VPOC migration. This is saying right now, this is too low. This is too low. Now right here, if I break below this, I need to get back above it. If I can't get back above it, then I'm going to revert. Let's see what it does. I don't get below it. So I'm kind of going, well, I'm above my 54 now. What's it going to do here? I come back here. So here I got to tell you, I'm confused. I'm conflicted. I'm thinking I want to be thinking longs. So I have to be thinking about getting long. The short idea didn't work. And I'm thinking about, well, what about the longs? But right here, I get VPOC migration. So part of me's going, you want to get long. There's another short-term part of me that's saying, well, we might get this counter rotation here. This is saying maybe we found too high right up here. There's a sweep. There's a sweep. So I've got sweeps. I've got micro high volume in here. And I have my sweeps. So I'm looking in here and I break right here. Now, resistance is going to be sitting here. And it's a I'm going to say it's a very conflicted trade here, because I've got VWAP, mid, and the only thing right here that's saying maybe we're going to come back across the range is this right here. And I'm in a micro structure. Now, the 54 is a very important level for me. And there's no precision in this, okay? So just saying. So this sets up a short for me, and it's extremely aggressive. And I was conflicted about it because of this. You see, I'm looking at this and I'm going, well, this is my over-under. Look where I am. But in the microstructure, this is too high. Too high. So this is not necessarily anything anybody ought to do. And this is where my scale was. Come back here. Right here. Right ahead of this. So actually, it's like there. So that's my scale. And then I'm looking for it to fall out the bottom. I'm under my 54. What made this really hard was, I think the term is flirting, with the 54. But in the higher time frame, when you get into these things, it's areas. So anyway, get my scale, and comes back, and you'll never guess what happened to me. I get taken out. Okay? So I had one stop, one scale, made a few burgers. My broker's are going to come over to the house and hug me. And I come out and I pick. Now here I'm looking at this again and I'm going, well. And this is full session VWAP at the time too. So I've got location here. That's where this comes from. This was too low. This was too high. This is too low. So I know now I have also support against here. I'm going to just throw another little thing in here so we have it. So it's really two-sided, very hard for me because I try to position. So I know the higher time frame is up. Now we come out here. I get a sweep. Now here I'm sitting here and I'm going, I'm going to tell you how I feel about it. Not good. Because this is hard. What's hard about this is it's reversion trading. So it's outside in trading, outside in. And I'm still bouncing around this thing. So I'm having a reasonably hard time with it. So, you get taken out of your short, then it goes, gets your overnight mid. This is the kind of stuff that will frustrate you and create emotional responses. I feel the emotional response. I just go, all right, that's the kind of day it is. I'm trying to get in a directional move in alignment with a higher time frame, which I think is up. But the market is rotational. So if I recognize now I'm not directional, but rotational, now I have to be patient and I have to be trading mean reversion. So you have to pick a side. What side is it? Well, for me, I'm leaning, as they say, to the north side, but I have to get outside. So if I'm going to be trading north side, I have a couple ways I can do it. One is I can get, wherever it is, if I can find an outside edge, and I look at statistics, 75% to come here, and I also have ETH higher low. I don't think the ETH low is on the hit parade, so I'm leaning towards the upside because that's the higher time frame. So that's all I can tell you about it. Now, let's come back and look at something. Now, I'm not saying this is a good idea. It's not my thing. I don't know what's a good idea for you. I trade in different time frame than you do. I may take trades and you're going to roll your eyes back. And of course, I roll my eyes back too at times. But I just follow a plan and I've kind of gotten over it at this point. What I know is out here, I had a sweep and a reversal. You'll notice the change in behavior. I got my buyers here. Now, out here is where the sweep was. We have icebergs, and nobody knows, here until you see this. Then if you get a pullback, you can get long and your goals to come there. That's the reversion trade, outside in. I didn't get that, okay? Not me. I'm too busy, thinking about, because of this 54-53 thing, it's kind of like flirting with upside, This right here, I had this, and I see my buyers. I have a variable high volume node here. I shift it up. This, and right? So what I have is this, 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 this. I took along here, not saying it's a good idea, just did, and got risk neutral. And I was going for this. Okay, so I get risk neutral and possibly higher. Okay, I get risk neutral, and you know the story, right? And here I'm thinking I got away with it, because I'm under here. So I know my buyers are here. There's my absorption. There's my extension. When I come back down, what do I know? Buyers are here, and this is my retail price. Right here, I test, and the buyers come back. I have my VPOC migration. So right here is resistance, support, break high. Where's my support? It's right there. Support. So buyers are here, buyers are here, buyers are there, buyers are there, and I'm thinking, you got a shot at this, maybe. But what do I have to do? What was too high? It was there. Where's my high volume in this distribution? Let me draw a little line for you here so you can see it. Because the way this tends to work is, and we don't know the structures, how it's going to shape up until hindsight. So there's no way to know. But here's what I know. This low volume, this outside edge here, let me just show you what I'm looking at. So the sellers are here. I don't know that. So no clue. What do I know here? Buyers are here. There's the extension. We counter rotate. The buyers are here because I make a new high. So where are my buyers here? They're here. Here. My sellers are there. If I hold this and that specifically, and that going to the moon. Buyers are here, sellers are here. And as far as I know, remember right here, no reason except change is right here. Now, this is what it looks like as it's developing. So you don't see anything here, right? It's just like, oh, we're going to the moon, yay. And we have this. This separation is called little low volume node. So this is the retail price. It's where the volume is in here. And then the idea is to go north. Let's watch the difference, how it changes. Going north, having a great time. Yeah. Uh-oh. Break low. These buyers and the buyers up here got absorbed by the sellers. And again, there's no way to know any of that. Look at this. Big icebergs, you see them? So they're selling up here. Now, that doesn't mean anything other than if the buyers can't absorb these sellers, then we're going to counter rotate. That's what it tells you. That's all you know. Now, right here is where there's change. So the high volume is there. The break of the buyers is here, and it leaves this. Then, if I can't regain this in here, I'm coming back here. Okay? So, needless to say, got my scale and got taken out. Okay? So, kind of like, come on. That was the last trade I took. I mean, just been a non-event, I'm still, my whole thing for, not my whole thing, but my thing for today is longs. So if I wasn't streaming, I'd be right back on this trade. It's two-sided trade, so it's outside in and going for this and up. So that's my trade. I can't tell you much more about it. It's just been, what it is what it is. So resistance is here and actually right there. So this is resistance. So these are longs for me. And I didn't take this, obviously, because I'm here with you. But this is my trade right here. This. All these there's your sweeps. And it's called mean reversion. So what I try to do, and I do want to say try because it doesn't mean anything works, which of course is recognize the condition of the market in multiple time frames. The higher time frame is up. The intermediate time frame is going through a correction in auctioning an unauctioned area, that low volume zone. This developing time frame has got shorts in it, and if the shorts can't get paid, which is the current scenario, then they're going to cover, and then we're looking for north of the border. It's as complex as that. So this is where I'm trying to go on the longs if I didn't get taken out. So, I mean, that's all it is. So, I hope that's making some sense. It's not a complicated day. It's just a frustrating day, which has nothing to do with trading. It has to do with emotions. Emotionally, it's frustrating for me to sit here and watch it go to target. But, that's it. So all I have for today, other than the early shorts that didn't work out, is longs. And that's all in TraderLab. Now, nobody has a monopoly on right, wrong. That doesn't exist here. It's your trade plan. That is the thing that'll get you. Because if you don't have a plan, you're going to be flipping around. And I also flip, but I don't do it often. In other words, I'll start out with an idea like shorts this morning because of statistics, and also that open trade is a very aggressive trade, which you guys know if you follow the stream. I don't recommend it to anybody. In fact, I don't recommend anything, but I'm saying is when you're betting a trade plan, you want to read it to develop your unconscious competence, but you don't want to trade it. There's no structure. So that creates much more risk for it. And the other part of that more risk thing is when it does work, it can have an outsized risk reward. So that's kind of how when you're putting trades together, does it justify risk, and is there enough yield in it over time that it has an edge? But for me, the trade is once the shorts were disqualified, then it's just longs. And when you're in rotation, there's only one way. That's outside in, mean reversion. I always say to traders in TraderLab, your job is to become expert at one trade. And the one trade or condition is mean reversion. Stressing the term mean. This is mean reversion. It's returning to the fair price. Now let's go to higher time frames. What do we know? We know the 54, 53 is an outside edge. So we're trying to go here. So this is like our over-under, so we traded down to here. Now we're back in here. So that sets up this. And if we can get up in here, back to there, not a recommendation. So all of this is based on the possibility of continuing down again, coming back. So for me, it was shorts to longs. Shorts didn't pay out, took a shot, c'est la guerre, longs, and now going here, targeting. Doesn't mean it'll get there. And then if we can get in here, back up here to 72, that's the trade for, that's the way it's laying out, and whatever it does, right? So you can see why this 53, 54 is important. If I can get back above here, I can come up this tail and maybe, come up in here. So that's it. And, or further, no clue, not concerned about it, not my job. There's the 71. So you can kind of see the structure. The 29, you can see it. Now, the rotations are random. That's the part that'll get you, you know. So our resistance is here. So if I was in this trade long, I'd be scaling here, right ahead of this, and then a runner. Let's see how it behaves. You guys have questions? This is just trading. You know, it is what it is. There's no, you know, I'm going to say is you just show up and do your thing. And then whatever happens, happens. Are you guys tracking? How we doing? Um, 64.52. Oh, we're looking at this? Well, I'm looking at out here. So what happened here? So this and I'm looking here. I had a sweep, and this is the full session VWAP, and I'm seeing my buyers. So, and I'm at this 53.54. So it's pretty important, but it's what we didn't do. You know, we came down, we got this 75% probability, and then I was looking for lower. But look where my key levels are for the downside. They're here. But I was looking for it because that's my plan. I mean, I can look for something, and I'm as surprised as anybody else, you know. And it doesn't mean that I won't get long, but I need to check the side that I perceive, and then just measure, you know, how does the market behave with these things? You know, I get a downside rotation, I get risk neutral, or it takes a stop, whatever happens. And for the shorts, I didn't get paid on the shorts. I took one stop and I got two well, not quite scratches, but made some on the two that did get risk neutral. And, you know, I get a little bit out of it, but I'm trying to hold. So that means I get the rotations. And if I don't, you know, it doesn't get to where it's supposed to go, then it doesn't go. As far as, and when I say supposed to, where it might go, it's not supposed to do anything. It really isn't. So, you know, for me, once I, in my rule plan, you know, my plan, once it proved to me that the sellers couldn't move the ball further, that suggests to me now they become the buyers. And then I want to get positioned to trade into them because that's where the stops are and they become buyers. So this long that you're asking me about, which is never a recommendation, this is the scale. Why? Because this is where the sellers were. So if I have sellers here, you see this, all this icebergs, I anticipate they will sell again. It's almost like, oh, really? You're going to give this to me? Here, have some more. And then either the buyers are going to consume the sellers, right? The passive side, and they'll be done. Or we'll run out of buyers up here, and the sellers are just going to stuff the buyers. It's like, here, you want some more? Ever eat too much? And then we rotate back here. That's what I know. And I'm saying it can do this or it can do that. And that's what I know. I don't know what it'll do. If I get through here, I've got my targets up here. This is where 72 is a possibility, as is this, or we don't get through this, you know. But I suspect, since the higher time frame, I mean, this is just a trade, you know. What it does here, nobody knows. If I get through here, I have this, which is the whole purpose of the long side trades. If I don't clear this, I rotate. That's what I know. Now it's just like everybody else. It's what's it going to do? Kind of interesting, isn't it? So, Edo, I hope that helped you a little bit. So, hope you guys doing okay. Please give a like if you're visiting on YouTube. Guys, this is just trading with a plan. I mean, I'm not minimizing it. This is just what the business is. There is no magic to it. You put your trade on and, it works, it doesn't work. You have risk management in play. Your goal is to get risk neutral. So basically, you buy a stop on your runners, statistical probabilities, and everything changes. So it's an alignment business. I always talk about, well, what is the business? It's alignment. You get out of alignment, you take a stop. And it's the auction. So what we're doing is we're trying to get in alignment with what we think has probabilities. The rotations are random. So for us as day traders, we are very hung up in this stuff, these rotations. Well, can you make a living doing this? Well, I believe you can, but you have to know your trade. In other words, what's your trade? My trade is out, this out here. Your trade may be like from there to there to there, because this is resistance, and you're done with your trade. You're just trading, you're bracketing rotations, and you're trading a rotation. That's okay. It's a 7-8 point trade, 6 point trade. You can do that. I don't do it because the more trades I take, the more stops I take. Funny thing. So less trades, more range. And that's just what I've decided. It works for me. But I also then have to accept that less trades, more range means giving back more open trade equity, you see. So that's kind of the catch 22. There's no perfect solution. Yeah. Anyway, you can kind of see this if I had my long on, there's some good range in it. That is what, at least for me, what works. In between, I'm in the turbulence with everybody else. So I just keep probing the market as long as the structure holds together. That's my thing. So, and again, I always have to say, it's not your thing, it's mine. Yours is what works for you, and over time, because you have to kind of meld together your ability. So let's say you come up with a plan, and it looks good on paper, but you can't trade it, right? Because you're freaking out that, you go from euphoria to depression, right? And you bail out here. How many of you have done that? Raise your hand. And then you get out basically near the low or at the low of the move because you can't take it anymore. That's hide. And then you get this. And now you're angry at yourself. Why did I bail out? Well, that's because your plan, you haven't embraced and accepted the randomness of the rotations, and you don't have confidence in your plan. And if you don't do metrics, I don't know how you can have confidence, because then you're only going to have emotions, and we're all subject to the emotional, So if you understand that, you have to solve for it. You're not going to get away without doing the work and get the outcome, because the emotions will overwhelm you. The only weapon I have found, and that's basically it, it's a weapon against the psychological aspects of this, the impediments, and I call it hide, the lunatic, who is wired to protect you from risk. Hide perceives a counter rotation as risk. Oh, I'm going to take a loss. Yeah, all right. You might. But if you know your plan has an edge, your job is not to micromanage, but to try to stay outside of the noise if your objective is to trade this, to come up here, which is what my plan is here. Kind of regretful not to be on the trade after everything, but there will be other trades today. But this is the primary trade for me, this thing, up here. So all the longs from today, we're looking at this. That's it. So I keep trading back in the direction of my plan when it comes to a location. And sometimes, as they say, it ain't pretty, but it's trading, you know. So is everybody with me? I don't understand what you're talking about, Papa. Red bubbles. If you want to understand more about order flow, you really should just go to bookmap and .com and watch some of the basic videos. They're short ones, and they can explain what you're seeing in some of this. You know, the green bubbles are just delta. They show us aggressors. The difference is, and here you see the sellers. Why doesn't the market go down? Because the buyers are absorbing the sellers. And the opposite, when you see the buyers and you see the sellers here, they're absorbing. And then the market rotates. Market comes back, you're going to get your sellers again. But if the buyers overwhelm the sellers, they're going to keep going until they can't. And then you're going to rotate. That's just the way it works. These are the targets up here. And then maybe here, maybe not. This is the primary objective for the day. And taking out, remember, the IB stat has over 98%-ish probability that we take out the first hour's high or low. You have to vet that, every statistic for yourself. So this is the target. This trade could be over, or you're managing a runner. Not a bad trade, I don't think. You know, see, it's a 10-pointer. And if that's what the market offers, that's what you get. You know, or you don't. Anyway, Papa, Peepaw. Yeah. So I don't quite understand what Louis with the one lot. Louis with the one lot. You must be someone who followed my stream years ago, because I always talk about Louis with the one lot. Do I think the volume will increase? Yes, I do. September volume typically picks up in September, but that in and of itself is not necessary for the market to do its thing. Remember now, the market goes up to go down, and the market goes down to go up. What did we do? Market went up. What about yesterday and today? Market went down. What's in the market now? Shorts. What might we do? Squeeze. What is the higher time frame? Up. What about the all-time high? Potentially on the hit parade. So has anything changed? No. Does the market just go up, up, up? Well, it can, but it tends not to. It typically rotates to take out the weak side. And I'm going to say typically, but it's a very, it's just nature of market mechanics. Under certain conditions, the market just gallops and runs away. Okay. But it was a news-based event on Friday, Jackson Hole. And when you have a news-based event, the market is going to respond. And then if it's poorly auctioned down below, which is what the sell-off yesterday was all about, and this morning, is it's going to come back. And that's just the way the market works. Now, does it do it this time or the next time? No. That's unknown. So the idea is, in a way, as traders, we know if we've done the work, what the market might do. We don't know if it'll do it, when it'll do it. That's the random nature of this thing. So that makes it difficult. But if you have a general idea of how the market works and levels that are created by participant behavior, then the idea is to get in alignment. And then you're going to take stops like we all do, because nobody can pick high, low, or sideways. It's really a area. And then if you're a bit off and you're running a tight stop, you get taken out. And then if the structure is still valid and your timing or your location's a bit off, then you put the trade back on if it's your plan, or you wait. Whatever your plan is, that's your job. You don't need to take a lot of trades, in my opinion. I don't. You know, I mean, some days I do, but it's not because I choose to. It's just because that's my plan. And if there's a lot of trades in my plan, I take them. If there's 2 or 3 trades for the day, that's what I do. If there's 12 trades, I do that. Doesn't matter, because the plan dictates what I do. The participants create the behavior and the environment for me to operate in. And then I use my understanding of how this tends to work, even though it's random, which is the problem, of course, and get an alignment and wear a helmet. That's it. So, Louis with the 1 lot. I'm curious. So, all we have, guys, is longs, in my opinion. If you were taking shorts earlier, that's fine. If you're not long now and you're fading it, I would suggest you look at your plan. Does that have an edge? Is this qualified for shorts unless you're a short-term trader? Or is it something where you want to be long and you're now back in alignment? And this can change at any moment. So it's not what it will do. It's what it's doing. What information do you have? What trades do you have? And where are the possibilities? This is a structured trade in TraderLab. Now, it's called the IB continuation trade. There is a problem for me with the trade, and that is you need to be long out here. So initiating here has more risk to it because we may just rotate back in. If you got long right here, you got to get risk neutral. So you'd have to really use tweezers because look where your liquidity is, and 65 is a strike. And you got your single. So this is an extremely aggressive trade. I would not personally add here, but it is a structured trade. And don't forget where we're trying to go. This is the target. This, and if this trade is good from here, we got this. So is it a trade that would qualify? Yeah, it is. Would I take it? Maybe not. I'm not going to say I would or wouldn't because I don't call trades. I'm going to say is I have to look at this, and I have to look at this, and I have to say, where does the trade fail? It's going to fail out here, actually under here, because it can do this and then do that. So this is just not something I would jump on. I would be waiting on it. But here's the dilemma for us. Okay, there's always a dilemma. Right? Where's that ETH high? I think I lost it. 63.75. So this was the target. ETH high, 63.75. The single, 65 is the strike. And I have the resting liquidity. So when I'm looking at order flow, I'm going, well, we know what's sitting here. And which is resting liquidity. The thing you don't know when it comes to liquidity is what are they going to do? Are they going to pull or are they going to execute? Well, if I see it laying in there, I have to put my exit ahead of it if I get long. That's really a tight range, isn't it? You could take this trade, but you got to really, if you're buying it here, you're going to have a problem. You have to be disciplined. If you were going to buy it, it has to be right against this, right here, to there. I don't know if you don't execute it that way and think of it that way, then you got to do a little more work on this because the IB continuation trade is a structured trade, but there's structure. Okay, so you got to be aware. So if you're chasing it and you ignore this, you might have a problem. I don't know. So where does this fail? Well, under here. And we have to be very cautious of this right here. Because if we come inside, we can come back here. So you just have to keep an eye on things. Are you guys tracking? This is making some sense? Yeah, thank you, Louie. Pepe, if you were fading this, I think you might want to get back to the drawing board on this. When you have statistics and the market is short and the trend is up, if you want to counter trend trade, but say your edge is rather remote, and if you're just taking pot shots at it, you're not doing yourself a favor. Here's a sweep. Remember, our outside edge is here. Our support was where? There. So if you're holding, you would be under this. It's interesting, isn't it? So if you're taking this, this is your obstacle. And let's look at this. Outside. Where was resistance? Wasn't it here? Break high. Doesn't this become support? Let's look at the profile. It's telling you right there. So this is the resistance. There's the break. Here's where the buyers were. If I come outside and get a sweep, I can potentially buy this. And I'm just going to show you a structure there. So if this is too low, this is too high. If I clear this, I come out the top. If I can't get through here, I'm going nowhere. Why is this too low? Too low, too high, too low, too high. That's all this consolidation that came from, where was it? This, you see. That's resistance, which came from, I think it was here, somewhere, there, all the way up back there. You see it? Resistance. Break high becomes support. There. See? So if you're getting short, of course, that's all fine, but I'm curious why. And when the trend is up. So the only thing we have at the moment to be thinking about is mean reversion. Outside, back to the mean. What was the short? Outside, back to the mean. If the mean is too low, then it's outside, back to the mean, which is this. Back to the mean. Back to the mean. Get through here, potentially higher. If I can't get through this and this, then hang out in here and chop around. So let's look at this in the viewpoint of an auction. What is it saying? When we were down here, what did it do here? Too high, too low, microstructure. Too high, too low, retail. Right there. Too low. I leave it. I now start auctioning again. Too low, too high, too low, too high, break high, retail. Right there. Too low. And you see how it sequentially is moving, chop, 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 break high, too low, break high, come back, outside edge. Oh, too low. Where was the last too high? There. So I have there, too high, and now I have my retail price to shoppers. I'm not paying that. Yeah, but it's on sale, Tom. Retail. Well, if this price becomes too high, but I might have checked too low, then what? Back to too high. So it's either I'm not paying that, or if this is too low, I can come back up here. So I can go there to there and forget it, or there to there to there to there, or there and continue because the trend is up. If I can get through 65, which has some sitting out there, I can continue. If I can't clear these sellers out up here, then I'm going to rotate. That's what I know. That's all I need to know, because I can't predict what will happen at these locations. But because I understand what is happening at these locations, I can anticipate the behavior. That's all I can do. Can't do anything else. I anticipate it. I don't predict it. I might do this, I might do that. When you put a trade on, it's really if this, then that. If not, then what? If this is too high, if this, then that. If this is too low, then what? Then that. That's what I know. If it's not too low, then what? Then back there. So it's, if this is too high, then that. If that's too low, then that. If this is not too low, then what? Then that. See? So what do I know? Too low? Then back there. Is this too high? Mm-hmm. Do I get through it? Then that. If not, then what? Then back, back, and maybe there. That's what I know. Now, how do I trade what I know? I try to align at locations that have edge, like out here, and I know where I'm trying to go. So if I put the trade on here, I got a scale here. That's what I know, and it's like using a shoehorn, but the trend is up. So, my goal is to get risk neutral at this thing, because then that kind of calms the lunatic who's going, you better get out. You're going to get stopped out. I hear it all the time, the fear. And I have to tell you this, I hear it. Why? It's always talking. Don't you hear the voice in your head? Oh, this thing, I'm going to get stopped. I mean, all this garbage goes on in your head because you're being triggered by these random rotations. So it comes down to really just making a decision and going, well, I'm going to hear it. What am I going to do? Well, I'm not going to respond to it. I'll take my stop because that's my job. How many times have you gotten out randomly and other times you hold it randomly? How can you measure that? If you don't have something specific that you can identify and always act upon it, then you're random. Market's random. And if you're random in a random environment, it's just gambling. So it's something, that's why I always talk about anchored inputs. And we have interesting conversations in TraderLab, of course, about different processes. And many traders think that if you put more stuff, you get more certainty. But if they're variable, then you're just basically making a mess for yourself. Again, my opinion, my experience. I'm only saying is I've done it because I thought more would create more certainty. But when I built systems, more didn't do that. It created more randomness. And optimization was the solution, right? For randomness, it doesn't. It's just more randomness. You just curve fitting better. That's all. But that was me. Maybe you'll have a different result. But most traders I know are not trading systems. Discretionary retail traders are not doing that. So, and everybody who's walked in your shoes has really done the same thing. There's nothing that hasn't been kind of gone through with a fine-tooth comb, Hedge funds have done all this stuff. And the bank does. No, they're not doing that. And I think if they could derive an edge, they would do it. So they're not doing what's in your retail toolbox. They just don't do it that way. So there must be a reason. So if you're doing what other retail traders do, you just got to ask yourself, are you just curious and you're doing research because you enjoy it? Or do you want to take the issues that derail developing retail traders and reduce or eliminate them? Which one of those efforts is going to give you the potential for sustainability? It's a question. You'll figure it out. Louis with the one lab. You should stop in TraderLab. Say hello. So guys, when you're trading and you're in TraderLab, despite what might happen here, which is higher or not, or we fall out of this and revert back here, both of these are possible right here. You could be done with your trade here, or here actually. You'd be finished. Now, this is the irony of all of this is the longs I had that I got taken out of and then was not able to put back on, my exit was right in front of this. It was right here. So, that's the difference, let's just call it roughly with the scale and everything, even trading light at least a 10, 13 point trade. That's the difference. It doesn't take much. And for me, that takes right now as a day that's pretty much a non-event, and that would make it a okay deck. Yes. Well, expensive, huh? To stream. So now, what do? You can be done. Or, see, this is the or. You have one more runner, and you're managing it. And again, once you stretch the timeline out, you're going to be subject to the emotional states of giving MFE back. So for me, it would still be long with a runner. Initiating here, remember I said this is a rough place, the IB continuation, I wouldn't take it. Coming down here because of this, that's a different story, you see. Does that make sense? Can you see how you might use the structure? Chrome face, I have no clue how you would do that. How you create a system and get the ultimate. I can't, and I don't know what you would do with that. And I know that I've worked with hedge funds and quants, and I see what they do. I also understand machine learning and some of these other elements. When I build systems, I wrote code. This is, of course, back in the Stone Age when we were on DOS, so a long time ago. So I found that no matter what my inputs were, and there's more today, the technology allows for more inputs, but more does not give you more. It depends really the business you're in. If you're an algo, you're a news reading algo, there's all kinds of different algorithms in there. There's just all kinds of different participants. But a system, at least for me, it never solved the problem. It actually was part of the problem because there's too many inputs and then there's too many variables. And how do you solve for that? So it's really more of a simplistic approach. And the idea of simplicity is to minimize inputs so it's not complex. So if we're using the human mind as discretionary traders, we need very minimal inputs to minimize conflict. There's enough ambiguity and randomness. So the inputs that come into a trade should be minimized. And they, in my opinion, again, I'm going to give you an opinion, should not be variable. Something I always think of it as an anchored input. The reference to all of this is gaming and the way casinos play games. They don't change them. They don't have random inputs. They just deal the cards. They play the games exactly the same way. They're not random, but everything else is random. Cards are coming out are random. The way the gamblers play cards are random. The dealer's not random. So that works for them. They've been doing that a long time, and it seems they do pretty well with that approach because that they don't have control over anything except how they play their game. So if we have random inputs here, then where's the control over playing the game? We don't have control, and we don't have anything we can measure. So anchored inputs with a minimum number of inputs allow for measurement. And what the idea of TraderLab is, and the reason I created it, was to help traders understand the business they're trying to be in and to solve for randomness. And that means the market stays random, but your behavior needs to be anchored so you can measure it. That's pretty much the thing we're trying to do here. And these are structured trades, which there's 60 PDFs of these that are available. There's no cost for this. And these are actual trades, and others are just screenshots. I'm not a vendor. There's no course. There isn't the holy grail and the secret one thing you need. It's all nonsense. And you guys, if you've been around the business for 20 minutes, you already know. It's just appealing to your FOMO, your greed, and your frustration. So it doesn't exist. So you can keep chasing an illusion. I mean, snake oil's been around as long as there's been snakes, and it comes in many different forms. And now you have influencers and, all this, and that's all great. But in the end, you have to find what you relate to. This is like a foreign language or a musical instrument, or any way you want to relate to it. And you need to learn to speak the language of the market. There is no magic indicator. You're not going to find the holy grail hidden in indicators. Sorry. Been there, done that. At least for me, it's never worked. But everything works randomly. What do we know about this? Remember, too low. How do you trade this? What is this? Isn't this mean reversion? That's the mean of this distribution. So if this distribution, too high, too low, retail, too low, you can't buy an S&P here anymore. If I come back to it and it's too low, I can buy this. Then my resistance is here, right? Too high. Well, if it's too high, I'm either going to bounce off it and come back here and maybe take this out because we're rejecting it. But if the trend is up, wouldn't I be only taking longs? And wouldn't I then be looking at this because of my sellers? Do you see how this might work? Not saying it's a good idea or a good plan. I'm just saying, can you see it? Does this make some sense? JJ Marks, good point. JJ is posting in TraderLab. Fighter pilots have their decision to pull the trigger or not down to 3 to 4 conditions. We can do the same. Context, structure, plan, area of interest. True. What is the best thing about Bookmap? Well, trades, that's a tough question. I couldn't answer that one. I don't really know. There isn't one thing. It's understanding it's an order flow tool. I call this the tip of the spear. Everything else for me, I have to understand everything else before I'm zeroing in here. This, I call it the tip of the spear because once I understand the condition I'm operating in, then this is I call a chassis. And I understand the condition of the market, which is all a function of everything I show at the top of the stream, the higher time frame in the integration. Then what this is doing is it's helping me see inside of the participant behavior. And I can open this up and I can get as really into nanoseconds if I want, which of course I don't want because that's too much minutia for me. But I can look in here. I can see really down to any, and I filter. So, I mean, I don't want to see everything, but I can see, algorithmic behavior. I can see everything. But what is functional for me in my time frame, the way I trade? Well, that's how I use Bookmap. Bookmap shows me absorption, icebergs, stops coming out. It's sweeps, notice, and I'm integrating my own understanding of how the market works with Bookmap. So Bookmap is giving me insight inside behavior. So most of us, we see a candle or whatever we see. We don't know what's going on. Prices are not equal. I mean, the fact there's a price here and a price here, they're not the same. Buyers were here. Sellers are there. Microstructure is right there. If I break below it, it says I'm going down. How can I see that? How can I see that I had sellers here, I got resistance here, and right here, sellers are there, I break low, right here is resistance. See how the resistance works. Now, that doesn't mean I traded it. I'm just saying is I can read it. What's important to me is not this, but understanding that if it comes to a location that is part of my plan, now I'm going to look at my finer tools for the nuance that I have vetted so I understand here, this might be a long, and I got to think about this. And if I can get above here, then I got to clear this. If I can't clear this, I'm going to rotate. But this is my fair price. So out the top or back here. That's what I know. And when I'm sitting here, I know that's the possibilities. That's all I know. I don't know what it'll do. That hasn't changed. 46 years of trading, I still have no clue. I am clueless, but I'm not ignorant. I can't predict anything. That's where the cluelessness comes from. But I'm not ignorant in the sense of what it means. I have learned to interpret the behavior. I have not learned or am able to predict the behavior. So I can anticipate behavior. I can't predict it. So when it comes down here, I know what it means. I don't know what will happen. So that's the difference. And neither does anybody else. So we don't know. But if you know the areas, that gives you an edge, I think, over other traders who don't know anything. They're just chasing with indicators. I mean, what are you doing here? Are you getting short? What about this? Are you getting long? What about this? Are you getting short here? When I say you, I mean anybody. What about this? Is this a short? Is this a short? Or is it a long? What is it? I couldn't tell you. What it is for me is a long up to there. And then that's it. And I'm scaled. And then it's either I get taken out and I go, I go and I have those words that we all emit, or that's it. It's just one trade. That's as complicated as the business is. We're not into, I used to always think, we all want to be right. How can you be right in a business that's random? How do you define being right? Who needs to be right, by the way? It's the lunatic. Needs approval, needs to be smart. The lunatic needs to know. And you're in a business where you can't be smart. Smart has nothing to do with it. Knowing doesn't exist. So how can you fulfill those things that work in the outside world that don't work here and don't even belong here? Yet we bring them with us because the reason we're probably doing this is because we've had some success with that, So now you come here and we bring that here, but it has nothing to do with this. In fact, that's the reason most retail traders don't succeed in this business. Is they're trying to fit the business into something it's not. So that's, I think, the grand illusion. And everybody, the marketers out there are going to feed that illusion. Looking for certainty. That's what we all want, but that's not the business. So you can look for certainty, but you can't get it. So if you can't get it, then why look for it? Solve for uncertainty. Learn to live in uncertainty. Solve for that. That's the goal. And that's why I created TraderLab. We are trying to solve for something that doesn't exist here. So if we can't have it, then we got to solve for something else. And that means you got to change your beliefs. You got to open your mind. And the fallacy of a random environment is we all have winning trades. Gamblers win also, right? But they don't have an edge. So how can a gambler, even though they have winnings at times, right? Everybody does. How come the casinos are profitable and the gamblers lose money over time? Over time. Because that's our business. So we can think about a casino. Decide you're going to be in the casino business, the gaming business, not the prediction business. Do you have a better opportunity of understanding that you can't predict anything, but you can align? And then with probabilities or statistics, and this has what was it? Taking the ETH higher low, 91% probability. I think that's pretty good. Taking the first hour's higher low, 98% probability, which is that. Does that help you? You see? That's the question. And it doesn't mean any specific trade is going to work. It means nothing. It means if you understand the market, you might be able to aim your barge in a specific direction. That's all it means. Does that make some sense?
Yes. So, size 970.0. Trade ESU 5 CME and NY sell 250. Yes.
Yes. Yeah, Crowface, the PDFs are just ideas to research. There's no plug and play. I know we all want it. We're all in a hurry. That's FOMO. Nobody wants to do the work. Everybody wants the result. That's FOMO. And most of us gravitate towards the gurus, for the plug and play solution. That's just FOMO. Most traders want setups without understanding how to use them. It's not a mechanical business. Otherwise, every retail trader would be profitable, right? Everybody's been doing the same thing since day one. Everybody. Me too. We all do the same stuff. It's part of development and learning. It's part of your education. Everybody does it. Yet the thing is, most retail traders don't learn from it. They just keep repeating it. And they repeat it because they have random winners. So it's, the belief is, and it was for me, is, well, if I make it better, I'll do better. Well, with random inputs, you can't make it better. You just make it the same, and you'll still have random winners. So the notice where we just came, right? Who knows, right? So the thing with this is changing the beliefs, and that's not easy. We can believe something, and remember, ancient mariners thought the earth was flat. And if they sailed to the horizon, they believed, and everybody else at the time, that they would fall off the end of the earth. They wouldn't do it. Well, it took some adventurers and those willing to take risk, which is in the minority, to sail to the horizon and prove that the earth was round and not flat. How long was the general belief that the earth was flat? Wasn't a new idea. It was around for millennia, most likely. Well, most retail traders are still think the earth of trading is flat. It is not. So every trader has to decide, what are they going to do? Are you going to keep doing what doesn't work and expect a different outcome? And that's okay. You make the choices, that's okay. But we don't have unlimited time or assets in this business. And if we're getting results that are random, and by the way, all results are random. The difference is edge gives positive results, no edge in a random environment with random winners gives losses over time. You can't be a winner when you don't have an edge. I mean, think about it. If you think otherwise, that's okay, but is that realistic? I can't answer it for you. I can only tell you the answer for me and other traders I know in TraderLab. And not everybody is going to be successful in trading, doesn't matter what you do. Because the psychological aspects of this are the greatest obstacle. It's not learning how to trade. I believe anyone who comes to TraderLab, does the work, can learn how to trade. The problem is going to be doing the work so you know that you have a statistical edge. The confidence and the discipline is the result of the work that creates the edge. It's not the other way around. You're not going to be confident. You're always going to be fearful. But if you can open your trade plan, which is what you would build in TraderLab, you would know that under these conditions, that this was the primary target and this is your obstacle. You would know that. Then you know if we can't get through here, we can rotate and come back or not. That's what you know. After that, c'est la guerre. That's all you got to know. So in TraderLab, you would open your book and you would know you're trading a specific condition with statistical probabilities in alignment with a trend. You get over 54, you know now that the possibility is to continue up. And why do we know this? Because the trade plan, which this is the 54. This was the outside 28. What was the ETH low? Go take a look. Where is the ETH low? It's here. Well, if that's too low, what might I do? Well, I can come back here, which is where we are, that single, and then maybe up into here or maybe not. That's the trade plan. Now, what is it going to do? Hey, I don't know. There's that single. There's the ETH high. All these are in the hit parade. And then if I can get, and we got a ways to go here. If later today I can get up in here, which no clue, I can come there. If I can't get there, I hang out in here. What else do you need to know? Because you can't know anything else. Just saying, Anyway, this is TraderLab. There's no holy grail, so sorry about that. I'm sure you can find that elsewhere. We don't have it here. By the way, if you have it, come to TraderLab, clue us in. We'd all like to do better. In fact, the idea of the TraderLab is that we leverage our collective experience. There's a lot of different traders, a lot of different methodology in TraderLab, and there's not a right or wrong. But the requirement for anybody is edge, statistical probabilities. Seeing something work randomly, unfortunately, we've all done that because we think, oh, look at that. The human mind sees patterns all the time. We all see them. I see a pattern, I'm going, oh, every time I see this, it's going to do that. Well, if I don't know based on statistics what it means, the behavior, so I can read it, and if I don't understand what I'm actually trading, I'm not trading this. I'm trading that. And yet, it may, this might be done for the day. Not my job. So that's it. It's not more complicated than that. It might not be what you want. I don't know what everybody wants. Me, I just want to be here for tomorrow, make a profit, follow my plan. And at the end of the day, I won't be profitable every day. Nobody is. I take stops. So do you. What's new? Casinos pay the gamblers, and they give you the cocktails and the ticket to the buffet. That's called overhead. So when I take stops, it's overhead. As long as I'm following my plan. And my plan, as you know, where's my support, by the way? Where's my support? Where's too low, right? Has anything changed? This is my question to this astute group of traders. Do I get out here? Do I bail out here? Or do I understand that this is my outside edge? Oh, it's on sale. Retail, too high. If I take this out and I can consume this or they pull, this is where I'm headed. Not a recommendation. Please give a like. Hope you got something out of this. This is the TraderLab. It's not the Holy Grail lab. It's just a group of traders, and it's about the business. It's reality, in my opinion. Ask anybody in TraderLab the reality of trading. And don't we all wish there was a Holy Grail and an ATM in the basement for all of us? Well, unfortunately, that's not the business. So if you want to learn about the business and maybe improve your opportunity, if you're willing to do the work, I believe you can take a step forward in your development in the TraderLab. And of course, you're all welcome. There's a link in the bottom of YouTube, and there's no cost. And TraderLab's not going to be here indefinitely. When I'm streaming, I don't trade. And as you can see from the trade I showed you today, that's a substantial dollar amount. So, but I do intend to keep doing it, but not for indefinitely. That's all I can tell you. Please give a like on your way out. Appreciate you visiting the lab today. And TraderLab participants, thank you for being part of the TraderLab. TraderLab has a substantial number of traders as part of that community. And I appreciate every one of you. And thanks everyone for your contributions and Bookmap support. Thank you for monitoring this stream and keeping everything running smoothly. See you guys tomorrow. Thanks again for visiting the lab. And remember, the community is available to all of you, as well as a library of webinars, statistical probabilities, a great team, data mining, and the idea is that we all get better together. Thanks again. Look forward to seeing you guys soon, and thanks again for visiting the TraderLab today.